Good evening. Ira Epstein with your financial market wrap-up, and this wrap-up is for the evening as we're here now on Thursday, September 7th, 2023. Football night, Thursday night football, first part of the season, so I know I'll be having a salad, put some cool stuff in it, looking at it. I'm not going to have a beer, and watching the game, and it's the beginning of the season, which I love. For me, that means basketball's coming along, and that's the sport that I'm in love with. But we'll take a look at all that later. Now, do not lose sight of what September is. It's notoriously difficult for stock indices. It is the weakest month of the year on a historical basis. Does that mean you won't get an outlier month? It could be something else. No, but what's there to make this do that? I don't see a thing. UAW, they are aggressive as can be. A 16% overall increase in pay, packages included, bonuses, were thrown out today, presented and thrown out as fast as they hit the desk of, I think it's Sean Fenn, Fawn or Fine. He threw it out immediately. This man wants a battle. He's going to prove that he's the next big thing in America, and that is what he's out to do. It's a 42% increase, 42% pay increase. It is a 32-hour work week. It is other days off. It is other benefits going to be thrown in. Take it or leave it, and that is his attitude. So what happened to me today on this was he just threw out a 16% pay increase. That's big. Didn't even give it consideration, and the way he threw it out, it tells you all about the man. And the man, it's in my newsletter because I was reading all of it and exact excerpts of what he did. He tells them, tick tock, tick tock. You know why? September 14th is when all the contracts run out. He's just telling you, he'll decide. It's his game. He's going to do it. But you can take your 16% and shove it. I don't know another better way to say it. When a man just throws it out that fast and doesn't even want to talk, that's what he's basically done. Then we have at the end of the month, the U.S. running out of money. All right. And already you're starting to see some of the senators, House of Representative people, everybody wants to tack something onto a bill now to get the money. And that's going to be very difficult. Immigration, border security, different things. All right. So what if you run out of money and have to close down parts of the government? What if 100,000 auto workers or more go out on strike? I'm just telling you what could be happening here. The unemployment rolls will swell. But let's talk that for a minute. Did you see the initial claims? We're back to the January, February, which are the lowest numbers of the year for both continuing and initial claims. This labor market doesn't give up. So what does that mean for the Fed? Well, the Fed's got a headache here because at first things looked a lot better with the jobs report, the JOLTS data. But these claims, and they do change often. Whoa, I would have thought personally that they were going to go up because I would have figured, okay, a lot of the people that are in seasonal service businesses, those are closing down or closed down. I don't know which phase, but they're right in that. People go back to work. The camps are all closed. Restaurants, some of the seasonals, they'll close down. We get that in parts of Michigan and so on. I see that all the time. No, the market absorbed all that and more. So big problems. So you put it all together, where are we with this? Well, what's reigning supreme is the dollar. You're up to the 105 area, which puts the euro under pressure. Tonight, the markets are stable to start out with. We are looking at interesting action taking place in the notes and bonds. They just don't give up much ground. I think you've overdone it a little bit personally in the energy right here. They got up to the Bollinger Band. They could easily back off from there. So let's go to the charts and just see. Now, for me, I am a chartist. I don't care what the name on the chart is. I read the chart. That is what I really am. I know people love the fundamentals and they want a reason why things are moving. Folks, honest to God, if that's what you're doing, then tell me every minute when you get trades that are within the minute, the market's all over the board, why that is. If you have the fundamentals to explain that, it shouldn't be moving like that. Charts are charts, and that's what I want to concentrate on. The bias of this market is up until you get a close under 44.09. Let's call it 44.10 if you round it up, 44.0975. From where you're at, that's not far. Do I think you can drop tomorrow 50 points to get there? I doubt it. Could it happen? Of course it could happen. I would never say it can't, but I don't see what's going to make that happen. So it still has the upward support. It's waning, but it's there. When we take a look at what went here, we had that big break. As I pointed out to you, and I'm not going to go through the theatrics again, you get a rally that's 30 to 50%, and now you're coming back and you're trying to figure out what is the next move. Think of it that way. In terms of chart pattern, this is a swing line. If you got a young kid, you could teach them and have all your friends amazed. If they put this on any chart, take the name off the chart, in fact, and put this on the way I teach it in my charting course, because I did it with my son who was 13. He's now 38 or something there. You'll be able to sit down and he could tell people, oh, the trend's up, the trend's down, or there's no trend. And they'd say, well, what's the risk? And he'd go, well, it's back to this low. So you've got higher lows, higher highs. It's not that it's magic. This is what you hear on CNBC, Fox, and what I preach all the time. You're looking for patterns. The pattern is still bullish. You're in a correction within it. Often, markets go to key moving averages. The word is key in quote. I use the 18-day average of closes. That's my line in the sand. You may use the 20, the 21. People use different ones. There are even services that I used to subscribe to that optimize them for each market. I found it a waste of time and money. It didn't make me enough, whether I was using an 18, a 20, or 21, to pay for the service. It just made no sense to me. But I've tried all those. And as you can see, the market just sort of hanging here. So I have a market that is in an uptrend. The bias is up. Bias is determined by current price to the 18-day average. Is there anything on this chart that can get all of a sudden bearish? Not unless you had an outside day down, which you're not even close to developing. Barring that, even if you were to break under this low, you would then have a higher high, lower low. So this is your battleground where the market's going to, I think, play around and try to give us a story as to what the next move is going to be this month. We're only at the 7th. There's a long way to go, and we have a Fed meeting on the 20th. Don't lose sight of that. We then take a look here in the market at higher lows, higher highs, flat there. Bollinger Bands, we're far away from both, and momentum is down. Momentum down, bias up, trend up. You need a settlement under 44, let's call it 44, 49 and a half or so in order to say that the bias is down. Are the traders buying it? Well, if they are, they have to have a stop under this low. That's very far away from here. I mean, you know, I imagine you could do that, but would I be telling a client? Never. That's an awful lot of money to be risking. When I go to the NASDAQ, same picture. It's as though, take the name off, you would swear you're in the same thing. But then you get to the weaker markets. The weaker are these. Yes, you have a trend up, higher lows, higher highs, but the bias is down, and it's been down for 3 days as the market's staying under the 18-day average. It's trying its darn best to say that the 100-day average is important. But if the market gives ground and gets through the low that it made 2 days ago, watch out. Then you're opening the door up for the 34,153, the 200-day average with the Bollinger Band, the 34,171. So that's what I'm looking at. You're at a very important cusp in this market. The Russell is identical, but even worse. Now you're getting a convergence of the 18-day, the 200, the 100. If it gets under all three of them, and if prices start under pressure here, because it's not a trend, you have a higher high and low pattern, you're opening the door for the 1835 level. So very important action, very important. Can't say enough about it. By the way, on the VIX traders that watch in the morning, where did the market go today? Remember I told you, first challenge of a lower Bollinger Band, the pros often will write what? Well, if you think that it's going to keep going down, you're writing a put, because you're betting the market's going to go against those writers, and it went back to the 18-day average, right, what it should have done. What it typically does. Higher high, lower low, no trend. sideways action, but the bias is down in the market. You're under the 18-week average. Your bias is down in this market, narrowing of Bollinger Bands, but certainly nothing I can hang my hat on, bullish or bearish in the marketplace. The dollar is over what? Well, it's overbought. It needs one more day to develop the most bullish signal of all, the embedded slow stochastic reading. That would require tomorrow another strong day. Doesn't mean it has to be higher, just a strong day. And if it embeds, then the pros will buy the breaks. They haven't had a break to buy. Other than this 4 days ago, they haven't had a break in this market. So that was, what, Friday? Because we weren't open on Monday. In the euro, it's the flip-flop. You're riding the Bollinger Band down. Are you going to embed? It takes 3 days under 20 to embed, but you're not there. You can't count today because I don't know where the market's going to finish. We're in Friday's trade. Both numbers under 20 for Thursday, both under 20 for Wednesday. And you know what I'm going to tell you? They weren't under 20 the day before. So tomorrow's a crucial day as I see it in currency trade. Very important. I think the professional money's covering all their shorts. You heard what I said, all their shorts in the pound. First challenge of a 200-day average with a Bollinger Band. You're not embedded. Embedded means you've changed from overbought or oversold to locking in a trend. Haven't done that yet. Bitcoin, this is very important. The market is flirting with losing its bearish embedded reading. Let me walk you back on this. This is the close of business on Thursday. Certainly looking bearish. This is what it's doing tonight, I should say. So if it stays like this, it's probably headed to the 18-day average. To fail, now you got to be able to prove now you can get under 25,485. So that's going to be a trick in itself. The game is acting like a bottom is shaping in, and I was bearish today. And the game is changing tonight, and you're always aware of that. So be careful if you're trading this because you're getting a different looking chart. Let me correct that for you right there, that we have had recently. In the Brent versus WTI, look at how you're under the 18-day average, sort of hanging at the 380 difference now. You're not, the word is, you're not even trying to embed yet, and you're at the upper band. For my money, I think the pros are taking off. They called it. I think you zipped, and now you're stalling, and I think they're going to step away for a little bit in this market. I don't think they'll give up their bullishness. They'll wait and see if it embeds. If it doesn't embed, they'll get another opportunity. If the market takes out here, 88.63, be careful. You get a break out of it, 1, 2, 3. You've moved to the right-hand side of the Bollinger Band. All of a sudden, you only had 3 days over, and I teach you, it rarely goes more than 5, and it's drifting sideways. Will it embed? Let's look again. You can't count today. We don't know where the market will finish for Friday. So we go to Thursday. Both numbers over 80. Not so the day before. It's an overbought market that can't embed. I think the pros are taking money off the table here. They'll take another look at it. And what do you do the first time you hit a Bollinger Band when you're overbought? Bye, Miss American Pie? Yeah. Sing the song. Be happy. Last, natural gas. Wow. So the strike was put off so far in Australia. We'll see what happens. California's building new storage facilities for natural gas. I just read that today. It's in my newsletter tonight as we go through it. Market's not trending. It is certainly on the low side. We're not blind. But in terms of a chart trend, higher high, lower low. So this brings you to understanding things on charts. And that's what I love to talk about. Technical tips from the top pros, all right? I wasn't one that they interviewed in it, but I've been involved with this old magazine called Futures Magazine forever. The Gantt square of 9, learn how to work with that. It's important. Traders will ask you about it from time to time. Absolute benefits of relative strength. Now, I used to teach RSI. Then I went on to teaching MACD. And these are momentum indicators. And then I ended up with slow stochastics, which to me is the best of the group by far. And the reason is it's got personality to it. It's overbought, it's oversold, it's going to embed, it's not going to embed, and then it embeds. And then you have to learn how to work with it when it changes from overbought, for example, to locking in a super bullish picture. Same thing on the other side. You just saw that you're losing it in Bitcoin from an embedded bearish. What do you do with that? How do you play with it when it's coming on? So that's the relative strength part. Rules for bottom fishers. Let me teach you the best rule. Don't be one. Don't be a top fisher. Don't be a bottom fisher. Go with the trend. Don't be at the turning point. You're not going to succeed. Next, optimizing stops. Very important, whatever that means to you. But we all have limited capital. How do you preserve it? How do you let a trade run, but understand you can't let it run to the point where if it goes against you, what's your ouch point? Optimize. Do you do it with money? Do you do it with chart patterns? Where do you do it? This gives you ideas on how to do that. That's been something going on for years as people try to do it. It's taken me a long time. I think I've got it. In any case, IraEpstein.com, free offers. Come up to the top here. And what do? Give it a click. You'll see an icon. It'll take you to the free offer section. Sign up while you're at it for the price counts. Wait till you see these, if you're a futures trader especially, with what a price count power is, and it gives you an idea where a market might be headed. We put one out every day, and then we put them out each weekend, so they're very important. I'm Ira. You have a great week, and no, I'm going to see you in the morning. We're a day ahead. Tomorrow, the weekend comes. Take care.